Oil just hit 4-year lows. A sitting president got captured by US forces. And Bitcoin's reaction? A shrug. No panic. No spike. No digital gold saves the day victory lap. Which tells you something important. And it's not the story that Twitter's telling. Guys, over the weekend, US forces captured Venezuelan President Nicolas Maduro, framing the move as a law enforcement action tied to long-standing indictments for drug trafficking and corruption. Markets reacted immediately, just not the way most people expected. Oil futures dropped to their lowest level since early 2021, with WTI briefly touching the mid-50s. Why? Because markets are already pricing in the possibility that Venezuelan supply, some of the largest reserves on Earth, mind you, could eventually re-enter global energy markets under US oversight. Chevron stock jumped double digits on that expectation alone. Meanwhile, Bitcoin and Ethereum barely moved, up about 1%, while total crypto market cap quietly rose to roughly 3.2 trillion. That contrast matters. Historically, geopolitical shocks do one of two things to crypto. They either trigger panic selling alongside other risk assets, or they spark a narrative-driven pump about financial sovereignty. This time, though, neither happened. And that's because this isn't a shock to demand, it's a shock to settlement. So Venezuela has been using crypto for years, not as a speculative playground, but as infrastructure. When sanctions cut off access to dollars, correspondent banks, and SWIFT rails, stablecoins filled the gap. Not for ideology, but for survival. USDT and similar instruments became de facto digital dollars for commerce, payroll, and cross-border payments. And at the same time, blockchain intelligence firms have long alleged that crypto wasn't just a civilian workaround, but a parallel settlement layer for state-linked commodity trade, including oil sales conducted outside the traditional banking system. That is the part that most people miss. Crypto didn't spike because this isn't new demand being discovered. It's existing rails being stress tested again. The bigger question now, though, isn't price, it's visibility. As enforcement intensifies, flows tend to consolidate. Liquidity will funnel into fewer intermediaries. Stablecoin usage will become more concentrated, faster, and more traceable. And that creates both opportunity and risk. So why does this matter? From a macro perspective, this episode reinforces something uncomfortable but true. Crypto is no longer a speculative alternative. It's a pressure release valve in the global financial system. Not when things are calm, but when they're breaking. Sanctions don't stop money from moving. They just change how it moves. And every time traditional rails seize up, crypto doesn't need adoption campaigns. It gets used by default. But that also invites scrutiny, because the more crypto functions as a shadow settlement infrastructure, the more aggressively governments respond through surveillance, enforcement, and regulation. This isn't bullish or bearish by default. It's structural. So, what should a smart investor actually do with this information? We know we got some geopolitical tensions going on. We know oil. We saw how the price of crypto is moving, right? So what do we do? First, stop watching the headlines. Watch stablecoin behavior. Local premiums, turnover speed, and liquidity concentration tell you more than the price charts ever will. Number two, understand that Bitcoin's role here is indirect. It is not the transaction layer. It's the balance sheet asset behind the system. When crypto rails expand under stress, Bitcoin benefits later, not first. And number three, guys, recognize the risk. As crypto becomes critical infrastructure in sanctioned environments, enforcement accelerates. That means sudden freezes, liquidity shocks, and regulatory spillover into compliant markets. Translation: volatility doesn't come from hype, it comes from coordination. So if you're positioned, size yourself accordingly. If you're not, don't chase the narratives that already happened years ago. So Bitcoin didn't move because this wasn't a revolution. It was maintenance. And when markets treat crypto like plumbing instead of a protest sign, that's not the end of the story. It's the part where the stakes get real. Guys, if you got value out of this, hit like, hit subscribe, and we'll see you next time.